The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Welcome, folks. This is Tom O'Brien. We appreciate you growling and prowling with us out here. Right now, you get the S&Ps down 7. You get the NASDAQ off 13. The gold contract is flat at 11.47. We get silver off 8 at 15.49. Platinum is down 4 at 10.82. Copper down 5 pennies at 2.59. Light sweet crude down down 44 bucks. Down $1 at $44.19. Bottom line, the oil broke out its bottom, folks, and it has volume down there. So this is going to be really wild watching this whole thing shake out. Bonds, the 10-year is up 10 ticks right now, 127.25. 30-year is up a full point at 162.12. It's going to be all about short-term rates today, folks. Coming up to 2 o'clock, it's going to be wild watching how this whole thing does shake out. And King Dollar. King Dollar is up 151.6, trading at 100.10. The euro is down 6 at 105, and the yen's trading down 22 at 121.15. Our phone number is 877-927-6648. Give us a call, folks, on what's going on in your world. Now, the world of the S&Ps, okay, let's take a look at this. So what we have out here is this. If we just take a look at the SPY first, you're going to see inside the SPY what we had on Monday. Monday had the small expansion of volume in correlation to basically the prior days, okay? So we had an expansion. We did 136 million. Yesterday, what ended up happening, you did 94 million. So 94 million, you're dying on the vine. You're dying on the vine going into the downdraft that had been created out there on the 6th with 188 million. So the way that is set up is that saying, okay, bottom line, doesn't have the strength, nor the price, to get up over the downdraft. What does that set up? That sets up, you want to go downtown. Why am I saying that? Well, what happens is this. If we go over to the Qs, the three Qs have given us the best indication that you have an ABC structure on the way down. And the reason being is that what the three Qs had done when they came downtown with some real force. We got down to 104.68. That was on Monday with a big expansion of volume. We had 42 million shares down there. Yesterday, you're going into the similar downdraft from the 10th, not even the 6th, because the 10th, the NASDAQ is set up a little bit differently. The 6th week came off the highs, went from 108.71 to 107.14, went sideways, then basically went south again. As we did that, the three Qs only did 19 million shares yesterday. So that setup is also saying, guess what? Well, what the 3Q setup is saying, you get an ABC structure on the way down, and this is turning into a complex one. That's how this baby is setting up at this particular point. Now, IWM. Now, this is the tricky one, folks, and this is why. The IWM, the small caps, we tagged the high yesterday, and it's like, okay, you got into the high. The high out there was 123.77, I think, 78. We had that high with 29 million shares. You tagged that high yesterday, and you tagged it with 23 million. Right now, we're at 123.29 prior to the open out here. That's where this baby's trading. The real key is going to be, is that the high, or is it going to push into that one more time? And the small caps, well, on a technical aspect, did they fail? Yes, they did. Because when they got over the 123.78, they closed at 123.66 and had light of volume. That sets up a failure. We'll see how we come off of that. What we will get in the first couple hours out here, I suspect you're going to see high volatility. You're going to see the bond markets move quite a bit, and you're going to see the dollar move quite a bit. Now let's go to gold next, okay? Because gold, bottom line, they pushed gold into the lows yesterday. It rejected lower price. Yet it didn't get any traction topside. Intraday it did, but guess what? It couldn't hold that traction as it was coming higher. So GCJ. We take a look at this GCJ contract, and what you're going to see is this. We got down to a price point yesterday of, let's see what we hit. Okay, so we hit 1141.60. We're at 1148.20 right now. Gold basically has to stay inside the 1146.50 mark. It's just barely staying inside there. So this is going to be really wild watching this whole baby shake out. The reason being is that I suspect what we're going to have is that we're going to have movement inside the bonds out here. We're going to have movement inside the currencies. If we take a look at the bond just for a second, because the bond is trading right now, first we go to the 10-year. What you're going to see in the 10-year is this. The 10-year right now is up 11 ticks. We've done 305,000 contracts. The 10-year is going to need about 1.6 million contracts in order to get some real juice going. We came down, I think we came down, yeah, so when we came down on the 6th, we came down at 1.7. Yesterday, it couldn't handle it. Yesterday, it was going into the swing point that was out there from December 12th. That swing point had 1.4 million contracts. We did 700,000. That's an indication that, bottom line, we're going to have bonds lower in price, higher in yield. That's the way that's set up. And 30-year, now the 30-year set up a little bit differently. And this is where the danger comes in about the whole call that I think bonds are coming down now. And this is what it is. The 30-year moved higher yesterday. It got over the swing point from March 12th. Now, it had lighter volume, but the 30-year wants to go test this 163.04. And right now, we're 162.14. Still not enough juice. Bottom line, both of these ABC structures on the way down. They took out the B point. They took it out with volume. This turns into a complex ABC. Thus far, it's still an ABC structure on the way down because what you have definition-wise is this. An ABC down, you get down with volume, you go back up with lighter volume, you come back down with volume, you break a B point. Complex ABC, same type of setup, except what ends up happening is that it gets back inside the B to C. As it gets back inside the B to C, in order to stay a complex ABC, you got to get up into that B and C with lighter volume. That's exactly what we're doing. So it's going to get really wild watching this whole thing shake out. Now, where do we want to go? We want to go to King Dollar. Because King Dollar, there's going to have some heavy-duty movement out here. Let's see. Let's bring this. Okay. DXM5. So, conventional wisdom would say if you're going up on rates, we put this in a 10-minute for a second. If you're going up on rates, no matter how far the dollar has already gone higher, that you would go higher, right? Because the aspect across the world has to do as how money shifts. Well, the dollar has finished a 2-to-1, a 1-to-2 ABC structure on the way up since 2011. It's like, okay, are you really going to basically do something more than a 1-to-2? I can tell you from the amount of time that I've done these ABC structures, and the first one I think I did was in 1993. 2003, that's a long time. Anyway, bottom line is that when you do more than a 1-to-1.618, never mind a 1-to-2 ABC structure, it's a reversal it's a change of trend. So how this baby shakes out, it's going to be crucial, you know. And my take on it is that no matter what the Fed does out here this afternoon, meaning take the patients out, not take the patient out, the whole ball of wax, that this dollar, bottom line, is going to do something other than go up, you know. So this is going to be wild watching this whole baby shake out. FedEx, FED, they came out with numbers this morning. FedEx, FTX, sorry about that. FTX come out with numbers this morning. They closed at 175. That's going to be opening up at 171. Let's go take a look at that baby and see what we have. And that's really intriguing. I haven't read the numbers on it yet. But what you do have is that's a high volume swing low at 163. Let me put this on a daily for you. You can see how it's going to go after. These high volume swing lows, folks, you know, they're all over the place. And in this particular case, it's going to blow. Oh, this is interesting. So, yeah, this is not even going to the, let me pull this back a bit. So we have to get back to December. FedEx has, look at it, just sticking out there. So December 17th, FedEx has a high volume swing low. The high of that low is 170. The low is 163. FedEx is going to open up at 171.95 approximately. The high of that is that 170. I suspect what you're going to see is this. If FedEx gets into the 170 at all, meaning gets into a couple points, what you're going to see is that it's going to run right down to the bottom of that area. And what it also has, this is going to get wild. Let's see what they have to say, because the amount that oh, look at this. Oh, this is wild. Okay. FedEx narrowed its full profit forecast as strong holiday season shipping was offset by effects of the strengthening dollar and falling fuel charges, surcharges for the operator of the world's largest cargo airline. So, check this out. This is really cool. Okay, so you know when we ship something, FedEx, UPS, and all of the above, and you know this is just like the surcharges that we get on our electric bills, folks. Okay, the bottom line is that so now the surcharge when they all started these was supposed to be specifically for the surcharge, right? Well, now they're saying that great, they had to take out the surcharges, and guess what? That was a profit center for them. Bottom line, they're saying that the strengthening dollar is hurting them, and being able to falling fuel surcharges. Earnings are going to be $8.80 to $8.95 a share through May 31st. And they were looking for $8.98. So they're saying that it's only about 18 cents less. But that's enough to basically whack them. And let's go over to UPS. Let's take a look at UPS, because UPS will get hit on this too, because it's going to be the same type of setup. UPS closed at $99.60. That's trading at $98.90 right now. UPS. We bring UPS up. Let's take a look at what. Oh, look at UPS already got smacked. UPS. This is a. Oh, look at this. So UPS had gapped away at 114. Gap down to 102. It's trading at 99 right now. And, man, this can go a lot lower. So if you put this on a monthly, what you're going to see out here is UPS, you're at 99, but 74 is all over it. 74 is basically all over that baby. If we take a look at the E-minis out here. Well, as soon as we get back, we'll take a look at these E-minis, because you're going to, I suspect the first couple hours of trading out here, you're going to get some action. Then this market's going to flatten right out, right up until probably 15 minutes of 2, and then there's going to be volatility in spades, and that volatility will be all over the place. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back.
As this one-of-a-kind winter comes to a close and spring approaches, it only seems fitting that now is the perfect time for a spring Tiger Dollar sale. For this week only, we're doubling the bonus that we give when you purchase any amount of Tiger Dollars. Normally, we offer a 10, 15, or 20% bonus when you purchase Tiger Dollars, but for this week only, we're doubling our special offers, and you can now get up to a 20, 30, or even up to a 40% bonus on your Tiger Dollar purchase. This is one of our best Tiger Dollar sales of the year and won't be around for long. Tiger Dollars can be used for any TFNN product or service and provide a great way to lock in added value on your subscriptions. Tiger Dollars never expire, so whether you're a current subscriber or plan on subscribing at one point in the future, take advantage of this spring Tiger Dollar sale this week only and get up to a 40% bonus on your Tiger Dollar purchase. This sale ends Sunday night, so don't miss out. All the details are on the front page of TFNN.com. Get your Tiger Dollars today and lock in your bonus before this sale passes you by.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
You got the S&P futures down 6 right now. Nasdaq's off 11. We have gold flat at 1147. And bonds, you got the 10-year up 9 ticks, the 30 up 1 full point. And King Dollar is up 91 ticks. FedEx is going to get hit in the open out here. About 4 or 5 points. And we'll see where the positioning gets done pretty quickly. For the first about hour and a half in this market, folks. And what I do expect you're going to see, basically a down open. The real key is that if you get a down open, which we will, the way the futures are hitting right now, the real key is going to be, is there a down open with any force, though? Do they have any volume behind the force? Because what we did have out here yesterday is this. Yesterday, you had the Dow Industrials down, NASDAQ was up, S&Ps were basically down a little. What you actually had, though, was a sideways day. You know, it was an inside day, it was a sideways day. You were actually pushing into the higher swing points with lighter volume. When you have something that is set up like that, it's like, okay, bottom line, the correlation as we open downtown today will be, do you have any juice on the way down? And if we don't have any juice on the way down, what you'll end up seeing as we come into this announcement at 2 o'clock is that you're going to see a push and a pull both ways, you know, and there's no doubt, when we woke up this morning, if you're watching CNBC, they had the clock on as to what is the countdown, and is that pushing it a bit? In this case, it's not. The reason being is this, is that short-term rates haven't gone up. I think we're pushing 9 years now. Okay, so that's a big number. Depending on how many years you've been in the marketplace, when the Fed changes for long periods of time. It doesn't mean that the rates are going to go to the moon, but when the status changes, it's going to change for a bit. Now, the argument is out there that if, in fact, they do change and pull it out, are they prepared to come back and change it again and bring it down? Because if you remember the argument 3 years ago when the European Union, or actually 4 years ago, the European Union went up on rates and people saying you're out of your mind, well, they ended up being out of their mind, okay? Because the bottom line is that crushed the economy, and then they had to reverse gears again. So we'll see where this whole thing's going to shake out, and we're going to see pretty quickly. On a fundamental basis, it's hard to justify that our rates will go up. The reason being, of course, that what you have in Europe is the rates are not only low, but the rates are even going lower. You know, this morning out here, you're talking about bottom line is that rates in Europe are basically, you know, Germany right now is running at 0.2% for a 10-year. 0.2%, to be exact, 0.207. That's like insane. France, which, you know, is an economy that's not flying, is 0.4%. Now, the economies that are broke are running at 1.2%. We're still at 2%. So you can see that and that would be Spain, Portugal, you know, Greece is at 10.6%. You know, so we'll see where this whole thing shakes out. What is amazing is that Germany and France are almost where Japan is. Japan's been at 0.3 for quite a while. But we know that the bottom line, rates in Japan have been low forever, and it hasn't done a thing for them. So as we come into this is going to be a big deal. So let's go over and take a look at a few of the banks, because what we have had is this. If you look at Goldman Sachs, this was interesting yesterday, watching Goldman, because what you had with Goldman is this. Goldman Sachs, and the key would be is that this is not only Goldman, but the banks themselves. Let me put this on a daily. What you're going to see is that they're coming into a downdraft that was created in December, and they can't seem to handle it. The downdraft in Goldman was at that price point of 191. It came off the high of 195 to 191. It did that in December. Monster volume on the way down. We came down with the 6.5 million shares. It has tried to get into that level 3 separate times on the way up. And so the consolidation in Goldman is huge. You know, the bottom of the consolidation is 171 and the top is 195. 20-point consolidation for a bank is pretty amazing. So what you had out here yesterday is that price-wise, it got down to 181, 188, but it didn't have any juice, meaning it was low volume on the way down. This it'll open slightly lower today, and we'll see whether the volume expands. Longer term, it looks like to me Goldman wants to go to 176 to 171, and where that is down to is what? Is a good old October 15th swing low. You stay right there, folks. When we're coming back, market's going to be opening up. Right now, NASDAQ is down, futures are down 12, S&Ps are off 6, and gold is flat. We're going to be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got the Dow down 85 right now. Nasdaq's off 14. S&Ps are off 7.5. And if we take a look at some of the Dow stocks out here first, this is what you have. Let's see. American Express is down 69. You got Coke off 35. Oxy's down 45. Big Blue's down $1. 3M is down 123. You get United Technologies off $1.18. Inside the NDX 100, what do we have moving out here? This is what you have. You had, let's see. Make sure this is live. I believe it is, though. Yeah, this is live. Okay, so inside the NDX 100, what we have moving it higher, even though we're lower right now by 12 points, is that you have Seagate Technology is the leader out there. That's up $1.60. Micron is up 39 cents. Western Digital's up $1.12 and Vodafone's up 36. Taking it south, you have Adobe down $4.49. Lam Research is off $1.56. Citrix is off 89, and you got AMAT down 35. Inside the Dow Industrials, which putting some pressure on the Dow Industrials is United Technology is the leader on the way down. That's down $1.35. We had Coca-Cola down 36. Home Depot is off $1. Walmart is down 67. What you do have inside the Dow, with the Dow being only down $85, which is pretty wild, is that you only have 2 Dow stocks right now that are positive. You have Marvell is up 13 cents. Verizon is up 9 cents. Rest of them basically are, no, the rest of them not basically. The rest of them are in negative territory right now. Now, let's go over and we take a look at the futures. So what are we going to try to glean out here? Okay, bottom line is that we are trying to glean, okay, does the market basically want higher price and or lower price with the aspect of how the Fed's going to basically position themselves this afternoon. So if we take a look at the E-minis right now, we'll put this on a 10-minute, because what you're looking for is this. Someone always knows something, folks. That's the real bottom line, okay? The real key is going to be who knows what, when do they know it, and when are they basically acting on it, all right? So if you take a look at this E-mini, what we have right now is this. It looks like the E-mini, which is good. This is really going to be wild if, in fact, this shakes out like this, because this will be dynamite as to relating how the market's going to react. So thus far, we're down $7. If you're watching Tiger TV, what you're going to see is that you have a B point of an ABC structure on the way down. It's a small one, but it's a B point, and we're going to go after that. At the beginning of the market, of course, you always have more volume, but what you have is this, is that the E-minis are always open, okay? So as to the aspect of how the volume comes in at the open, it's important, because guess what? If this market wants to go up, you're going to have volume on the way up. If it wants to go down, guess what? They're selling it. Thus far, what we have is this. They're selling it, okay? We have a 10-minute basis right now. We're already at 41,000 contracts on the 10-minute. The 10-minute wants to go after the lows of yesterday, which is 2057. Okay, so now what you want to do is set up both sides of the trade. So what do you do first? What I do first is say, okay, where's the A point? The A point is 68. The B point down here is 57. So we have $11, right? Your C point is set up at 61. So what does that give you? It gives you 2050. Well, the 2050 level, this gets really wild. Let me bring this back. What you're going to see here is the 2050 level gets you set up about on the 13th, which was last Friday, and that's 2045. That's where basically there's a little juice. So thus far, the way this is set up, and we'll see at the end of this 10-minute period, right now you're into that by 8 minutes. Thus far, this what would happen is this 10-minute, as long as it doesn't get over 2060 in the next minute, that is saying that you're pushing lower with volume. Why? Because we got down to 2057. That's the way that's set up. So we'd build some cars, you get into that level, and we'll see if in fact that's what we're going to shake out right here. Oh, look at this. We're right at 2060. It's almost like this is the truth. We're right at 2060. Now it's 2059. Bottom line is that we'll see where the shake's at. It's not going to make the 60. Maybe it might. It just made it. I love it. Okay. So now this is what you have. Okay, you're at the 60. So now the key is, okay, are you going to push into over those highs with volume? So what does that give you? You know what this gives you, folks, which is a trip? There's no doubt. And this is where today's going to be a tough one, period. That's a toss-up. Because it's like, okay, what did this bar just do? Did it push into the high or push into the low? You know what you have to do? You have to wait till the next bar. The next bar just opened, and we'll see where this goes in the next bar. Because it didn't tell us anything. It didn't tell us whether we pushed into the low or pushed into the high. So this next bar that's coming out will basically give you more information about what that is doing and what it wants to do. We take a look at some of the high-volume stocks in this low-volume market. This is what you have happening. We have Oracle's up $1.90. You got Cisco down 12 cents. Adobe's off 463. Adobe's getting whacked around. Coca-Cola is off 43 cents. Inside the Dow Industrials, what we have, you have American Express down 55. Big Blue is down 94. And inside the oil structure, the oil, you have Exxon flat. We have ConocoPhillips down 14. The banking structure is basically flat too. So this market, I suspect, is going to basically probably go after this little small ABC structure on the way down. The way that the S&Ps are trading, here they go. Someone's going to hit it right now. Yep, here they go. Okay, so S&Ps right now down 850. It's going after it. Just got underneath. It didn't go underneath the low yet. The low, we're at 2057. It's taking it out right now, and bottom line is at 2050 is on the agenda here. First leg down, you had a little support there. This baby wants to go south. If we go, let me just put up the SPY for you for a second. Watch how this SPY shakes out. The SPY, you take a look at the SPY right now. What you're going to see with the SPY is this. The SPY is trading at 207.11. You're coming into the lowest swing point. Intraday this is, okay? So it's only a small ABC structure on the way down. You're coming into this, and what we need, let's see, that's good. The market was open yesterday at 11, so we need 1.8 million shares as we get into it. It's at the beginning of the bar. Yeah, you get 8 more minutes. You know, we'll see whether we get that. You get that, that just basically says that, hey, listen, you're going to go down to the lows that were established at 220 on the 13th. But that low there, in fact, if we go get into that low is a heavy low, meaning it's quite a way down, no doubt about it. Now, let's go over to the TLT, because bonds and the dollar are going to have high volatility here in spades. TLT out here, what we're trading with the TLT on a daily basis, you had a slight gap open, and this TLT, you're up 76 cents. And there's not much movement in it, actually. That's the way it's set up right now. Basically, the little baby is just laying there, laying in wait. And we'll see if, in fact, the 10-year is giving it up, though. The 10-year is up 7 ticks. Watch this. We'll put this 10-year up for you for a second. You can see how this 10-year is trading out. This is going to be a wild day, folks. I'm telling you. TYM. 10-year out here right now. Okay, so we've hit 127.27. You're at 22 right now. You put this back so we can get some clarity inside it. They're going to hit this again. So, you know, we'll see. It looks like it wants to flatten itself out, meaning 127.15, 127.16. That's the way that it seems to be laying out there right now. They haven't hit gold yet. Gold's still flat out here. The King Dollar's down 76 ticks. What is going to get intriguing now? This is where you can get a huge amount of information off the marketplace. You have the Dow down, the Nasdaq's down. Not heavy, but you have it down. The bond market, if the bond market starts giving it up right now, and the Dow stays down, and the Nasdaq stays down, the S&P stays down, which I expect, that is going to give us a huge heads up that there's a huge dynamic change of trend inside the marketplace. And where I'm going with that is that on Monday, that's what we had on Monday. On Monday, you had the market that was up big, and in fact, the bonds were up, okay? That divergence is brand new, and that divergence didn't make any sense. Why? Because what ends up happening is that as the market was going up, it's like, how are bonds in the market up at the same time? Meaning up big. Bottom line, the bonds are up on lighter volume. What does that set up? That sets up a structure on the way down. Why? We had already taken out the B point of an ABC structure on the way down. Gold, we go over to gold and we take a look at gold again, because there's no doubt that the gold market right now, it's pushing into the lows, and it's pushing in with light volume. Yesterday, they basically got the price down, but there were no sellers underneath 1149. Right now, you're at 1147.10, and you know, there's no sellers. There's just no sellers out there. You take a look at this contract, what you're going to see is that you're coming into this contract, and all you're doing is you're coming back into where the sign of strength was yesterday morning. You know, yesterday they took it down to the 1142 area. You came off 1142 with monster volume. You came off with 14,000 contracts. It came back down there last night with all of 200 contracts. It came back down there this morning on the open, and this was the important one. It came down on the open with 978 contracts in correlation to the break top side with 14,000 contracts. So the way that is set up is saying that gold also wants higher price. Man, the dynamics are out here are just wild because they're all over the place out here this morning. There's no two ways about that. You know, FDX, let's see what good old Federal Express is doing out here. So FedEx came out, that's not bad. FedEx is only down 270. Adobe's getting hit. Adobe came out with numbers. That's down $4. And what's interesting about Adobe, though, if we look at Adobe's not a bad setup. It had some big strength out here going all the way back to December. You know, so Adobe's going to need a lot more volume to get basically to get croaked down at these lower numbers. You know. Dow right now, let's see, the Dow Industrials are down 83. You get the NASDAQ off 18. S&Ps are off 7.5. And we take a look at the 3 Qs, the NDX 100. How are we doing? What the NDX 100 has done, we got 1.5 million shares traded. The 1.5 million, you get light volume there. So on the three Qs, you're at 106.36. You get to break 106.16, and then you'll see some action on the way down. The SPY, the SPY, the way the SPY is set up, the SPY is doing an ABC down. So while we're close, okay, the SPY is at 207.09. It would have to get under 206.98. It already has the volume. We're at, I think it does. Let's see. You get 8 minutes. You're at 2.3 million. Yeah, you are. Okay, so you already have the volume. The real key is going to be, does this get underneath that 206.98 in the next minute? If it doesn't, what you're going to see is that you're going to see it's going to open at the bottom of that range, and opening at the bottom of that range really kind of gets dangerous, no doubt. Let's go to Jim in Palm Harbor. Hey, Jim, what's going on?
Hey, Tom, I'm really perplexed about platinum, you know, keeping that $50 under gold. And I actually ran across a dealer yesterday and looking at a 1-ounce platinum coin for, I wanted to buy it for $11.50. He said he would let it go for $1,200, and I just don't know whether to wait and see if we hold this $11.40 where gold is now.
Interesting. So he wanted a $100 premium, right?
Yeah, he wanted $1,200, so we're talking
And when you say a coin, was it an eagle?
Yes, it was an eagle. It was a
I'd buy it. Buy it.
Okay.
I'd buy it in a second. This is what ends up happening, okay? The eagles, folks, okay? Well, there's a couple different things that end up happening with the gold, with the platinum eagles, right? The platinum eagles, whenever you buy them, have a huge premium. Here, just stay with us, okay?
Okay.
This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials right now down 85. NASDAQ's off 18. S&Ps are off 8.5. We're going to be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. We get the Dow Industrials right now down 78. Nasdaq's off 13. S&Ps are off 7.5. And don't forget, folks, as you're over at TFNN, we got our man, Mr. Dave White. Dave's going to be doing an outstanding workshop tonight. That workshop is going to be on what? It's going to be on how to trade option expiration with our man, Mr. Dave White. That option expiration is this Friday, folks, okay? And the way that you can come into this workshop, it's for subscribers. You can test drive his newsletter right now. The Path of Least Resistance, you get it for a full month. You'll get the newsletter. You'll get the option webinar tonight. It's going to be an outstanding webinar. And as you're over there also, what we have going on right now is we have the Tiger Dollar bonus spring special going on. We started that 2 days ago. It goes until this Sunday. If you have product at TFNN right now and you want to save, whether it's 20, 30, or 40%, or you may buy product in the future, it's a great deal. The way that it works is that Tiger Dollar is a good for any product at TFNN, no expiration date, totally transferable. The way it works, if you buy 500, you get 600, which is a 20% bonus. If you buy 1,000, you get 1,300, which is a 30% bonus. And if you buy 1,500, you get 2,100, which is a 40% bonus. We're talking with our man Jim right now from Palm Harbor, and we're talking about Platinum. So the $100 premium on Platinum, Jim,
Right.
okay, is a good deal. Well, when I say a good deal is this. If you're going to hold the coin for a period of time, it's a great deal. I happen to own, in 2005, I actually owned 10% of the whole float, folks, of 2005 Platinum coins.
There were only 6,000 in a minute, Tom, so you did a good job.
I did, and I got them right off the mint, folks, and I just kept buying them. The bottom line goes like this. So when
no coin dealer has platinum in stock. I mean,
they never do.
Pasco County down to Bel Air, and no one has any.
No, they don't. They don't. And what ends up happening is that if you're going to buy anything, platinum is the thing to buy. Okay, because that will reverse itself. Hey, it might be another 5 months, and then platinum will be worth a couple $100 more than gold, man.
Is it a harbinger of weak car sales coming up in the future?
It's hard to tell. Have a great one, man. Have a safe one. You stay right there, folks. Dow's down 92, Nasdaq's off 13, S&P's are off 8.5. Look forward to speaking to you later.